And hi, everyone. Welcome to another edition of Your Money Radio. Tim Razor, Dan Stewart, Don Vandervoort here with you. So a lot to talk about this morning with you as we tape the show. It's 11:31 Central. So what we started taping in the mornings, and we're typically waiting as I draw an arrow up here to what time it is on Friday, because European close happens at 10:30 Central, and a lot happens after European close. The markets actually start moving. 12:30 Central happens, which is typically the most bullish time of the day. Just a lot going on, but I've got a lot of topics that I want to cover with you. And a lot is going to be focused in and around the president's announcement and Corona, and had a bunch of other content I wanted to talk about with you this week. But I think what I want you to understand is what to watch and what you should be looking for, and how to get out of the depravity of politic in the markets. And I don't mean your politics is terrible. What I mean is when you start mixing your politic with your markets, that's when things go right. And it's really interesting. So you can see what's happening here with markets. Let me just minimize a couple of things. So here is when the markets broke around just after midnight Central. And they hit the lows, and we just took out, this is the NASDAQ. Let me just type that in there because it is not clear that we're looking at a NASDAQ 5-minute chart. And this is, oh, here we go. And this is the lows that just got taken out right after what? Right after 10:30 Central. So to say that the markets are going to crater and go to hell in a handbasket, I don't know that. But to tell you what I want to look at, it keeps me in a bullish mindset. And what I'm about to cover here, I think will help you with all of your trading and all of your investing. So if you look at a daily chart and you get off the minutia of a 5-minute chart, you can see that this market is in fact still trending higher. And so there's a couple of clues here that keep you potentially on the right side of markets here. So you don't have to participate. Cash is always a position, but there's a number of people that went out at the open and they sold this market. And well, Tim, how do you know they sold this market? I know that because this is a 1,780 tick to the downside. That is the lowest tick of the year. 1,780. That's all this selling that piled up overnight, where people were hitting the sell buttons on equities. And so this tick comes, it's an amalgamation of 3 exchanges, but it generally is the New York Stock Exchange. And so then you can see the tick starts getting this bullish tone to it, takes out that tone, and now you've got another bullish zone of buying coming in here. And it's reflected where the market is being bought. It's being bought in small caps. It's the Dow is back to session highs, S&Ps are back to session highs, but the NASDAQ is not. And that's actually bullish overall for markets. You've got these other 3 indices that just aren't propping up the markets. You've got these other 3 indices that are helping out with markets, and the NASDAQ still holding on to the 21 exponential moving average, this pink line. So you've had a number of closes. You got this little flat base coming here. That's actually really bullish for markets. And then if you take that information and you plug it in here with the volatility futures, you're not in a state of inversion. And this is really crucial here, because I'm taking the current month's contract, which has just about 3 weeks on it right now, at 31.85, and measuring it against the November contract, which is at 32.90. That's a really big deal. If the people that matter in the market, the professional traders, if they thought that the market was about to fall out of the sky, and by the way, it might. It's a market, and anything can happen. And that, when I say that, the market loves gridlock. The market loves knowing the plan. The market doesn't like the unknown. And last night was the unknown, hence the reaction. But if professional traders thought that this market was going to fall out of bed, go back to September, take out September lows, what you would see is them buying protection. And this is really crucial that you understand this, StockNerds market lovers. Right here, if mutual funds, pension funds, hedge funds, they just can't sell. They've got billions of dollars at work. If they sold, they would depress the stocks themselves. They would cause their own flash crash per se by dumping all of their stock. So what do? They hedge and they buy volatility futures often to do this. And so what is that? What does still all that mean? So they'll buy the current month. They're not going to buy November. They're not going to buy December. They're going to buy the here and now. And so the easiest way for me to explain this is by something that you're used to with duration, and it's car rentals. And so if you have a car rental for 1 week, you would expect that to say cost $10. If you get a car rental for 2 months, you would expect that to cost maybe $100. But in this scenario, what does it tell you if price inverts? That the 1 week cost $100 and the 2-month rental cost $10. That means there's a potential scarcity of cars that, or there's a big storm coming and we got to get the hell out of Dodge. And so what you want to do is you want to understand what you're looking at. You're looking at a situation where, yes, volatility is up today, but it's not pricing over November's contract. And therein lies, well, panic's never a strategy, but therein lies why I'm, markets are NASDAQ's down 2.5%, a little over 2%. The futures are, but I'm not incredibly bearish. And maybe the word yet is there, or hey, it's coming, Tim. And look, I think your job and how you don't mix your politic or your emotion with your market is you don't come out and make declarative statements in your mind that the economy, the jobs numbers, whatever it is that you're placing your bets on. You don't have to place your bets. You just have to be able to spot the turn. And let me go over how to do this with you, because that's where I'm really getting at. Because if you bought yesterday, if you bought just yesterday, then maybe you're like, oh, I'm getting smarted. But there's a way that you can spot the turns. And let me just explain to you what being able to spot the turn allows you to do. So here are my recent buys. So as I engage my marker, and these are in no particular order. So I bought Piton. I'm just going to list them here for you. I bought Piton on 9/29. Okay. Let's see. That's up. It's up about 11%. I bought NVDA, and notice the dates here. NVDA. What do we buy that at? 9/24. So 9/24. That's up about 8 or 9%. Okay. Pins. I almost said pinata. Pinterest, bought that on 9/15, and that's up 19%. DraftKings, DKNG, I might have that. No, that's up 19%. DKNG, bought that on 9/24, and that's up 21%. Let's see, Penn. And this, by the way, Penn and DKNG, I'll explain my strategy with these two. 9/24, same day, and that's up about 8 or 9%. When I don't know which one's going to lead, I pairs trade them to the same side. I don't offset them. I buy both of them. Spotify, which you probably can't see because I'm writing over my chart. Spotify, bought on 9/18, okay, and then that's up about 5 or 6%. And then there's probably a couple more in there. But notice these dates: 9/29, 9/24, 9/15, 9/24, 9/24, 9/18. What's so special about that? So as I pull up this NASDAQ daily chart, I need to point out to you something that was pointed out in videos that we do every night here. So not 3 stocks to zoom higher. Oh yeah, it was this video right here, where we covered, this was on 9/25, we covered the potential for an inverse head and shoulders pattern, which is a slingshot pattern off of the lows. And it doesn't have to play out, but here, and then this date in particular, right here, is what? It's 9/24. If I hover over it, that's 9/24. We don't take out the low from 9/21, and that is an incredibly bullish sign. So yeah, I was early. So I bought what I have. I have like what's that? Pins. Pins was bought on 9/15. There were some stocks that just had tremendous resilience for the market's forces. So if you go here to 9/15, look at this stock. it's 34, it gets an 8, it gets all the things that we talk about, and then it just really never looks back. That stock's amazing right now. But if you look at all the 918 was Spotify, we'll look at Spot real quick. Spot, 918. And this was 916, 917, 918. It almost tries to take out the lows. It's starting to move a little bit, not too much. That's not a great looking chart, by the way. And that's kind of on the chopping list if I start needing to sell. But look at the DKNG 924. So the day that we didn't take out the lows, buy. The day that we don't take out the lows, buy. And if it fails, what do? You just sell. And you have to have a set of rules. You have to have a set of rules that get you in and get you out. But at no point in time did I tell you, or when I was doing the videos with you, or when I was talking with you through the podcast here, hey, the market, we've got all these worries, all these issues. Price is what you want to follow, and it's real easy. It's real cynical, by the way, too, to go, price is truth is the worst phrase. I mean, it's true. It's a true phrase, but the way people say it is so awful. Price is truth, but that doesn't help you with the psychological aspect of price and how to handle it and how to compartmentalize in your mind what's going on with, like when I say Donald Trump has a coronavirus, okay, and you can
Donald Trump has coronavirus,
or you can do Don just did,
Don woke up,
and you can add the drama to it and say the leader of the free world has coronavirus. And that last way I phrased it really has a lot of trappings with it. And then you start going down the rabbit hole of everything that's awful. And look, there might be a ton of awfulness that comes from this. There might be a ton of good that comes from this. That's not what we're here for. What we're here for is to help you, one, protect your wealth, and two, grow it. And it's really in that order. And anybody who tells you otherwise, that we grow your wealth, no, the first thing they need to do is be able to protect your wealth. And so being able to protect your wealth starts with having a set of sell rules. And so what gets me bearish this market, what I'm looking at S&P futures on a daily chart, let me just come back here. There we go. 30, let me show you where S&P futures went to last night or today. 3,300. They're finding support at 3,300. You're clawing back the 50-day. Stock nerds and market lovers. None of this happens without enthusiasm for the markets. And you could be saying, well, Tim, there's really not that much enthusiasm. Have you seen the big drop? Markets ebb and flow. My job is to interpret what markets are doing and then take appropriate action. And so it doesn't mean you catch every top. It doesn't mean you catch every bottom. But being able to spot the turns is crucial to your thought process, because your thought process says sell everything. If you're just going on your raw emotion, if you're going on what's reported in the news, if you're taking in the majority of internet sites, newsletter writers, you're not buying the market, and it doesn't jive with your mentality. And so what gives me confidence in this process? It's my ability, one, to read the markets, but that doesn't mean I get it right. So I know I'm fallible. That's number one. And number two, because I know I make mistakes, that's what fallible means. I take small position size in non-trending markets. So 2.5%, 3%, that's not a fraction, 3% position sizes. And so it's really important that you understand this, that you can participate with smaller size, but what happens psychologically is greed gets in the way and you want to take tremendously big size, and therein lies issues. And I think that is really the overall arching message of this week's podcast, is that, it's real simple to say rules get you in, rules get you out, but what rules? How did you spot that? Well, one, if you're not adept at spotting them, that's fine. We're always here to help. In these videos, look, we don't make you register. If you're watching this for the first time, we get thousands of people that watch these videos. If you don't even have to subscribe, you can just go onto our website, find my Twitter handle. I tweet them out as well, and you can just watch them and download them and study them. If you want to get them sent to your inbox the moment we populate them, the moment that we finish them, we do that too. And then if you have, if you need help, you can always just reach out to us. And so, but we're here to enable you. We're here to actually help you do this. But you can't. Today is a real exemplary day in understanding what drives price, what drives markets, and knowing there's a rule here that I knowing having rules here, like I don't sell on these big negative ticks. And the reason why is it's a contrary indicator, just like the put call ratio is a contrary. Put call ratio, of course, is up today. Just like the put call ratio is a contrary indicator, because you typically, and I say typically because there are some markets you don't want to buy that dip. You want to fade that tick. I want you to think of those big tick readings as the bears came out of the woods and they literally shot every round they had. They had their weapons, which is selling, and they sold everything. They gave, if they would drip and drab it, like, hey, if the markets opened up flat today, if they opened up flat, I would know that the markets have more room to the downside because the bears didn't come out and shoot their weapon. I'm trying not to say shoot their load. They didn't shoot their load right at the open, but the bears shot their load at the open. And so you don't get much more negative than 1,700 ticks to the downside. Okay, now what can they do with it to the upside? And today has been really, really constructive. Now, it doesn't have to end this way. I mean, it's 11:48 Central. It doesn't have to end this way. But I think you know what market sensitive stocks are. Market sensitive stocks are Amazon, Apple, Nvidia moves, Tesla moves with the market. And you know what isn't so market sensitive right now? Maybe a Zoom isn't so market sensitive, and a Peloton isn't so incredibly market sensitive. Or if you don't like tech, something like Lennar isn't quite market sensitive right now. And for me to tell you, I know which stocks are going to be market sensitive and which stocks aren't, that's a misnomer either. That's just me following my rules of letting markets tell me which stocks to be in and when to be in them. And we cover that every night in our videos. And so with that, I'll open it up to the floor and see what the fellows have to say.
Yeah, following up with what you were talking about with ticks and the VIX, TLT is down today. If you were looking at a huge rush, a huge flight to safety, you'd see buying in TLT and it would be higher.
Yeah, okay. You're putting pressure with all the spending. That kind of brings me to a point. I was on hold at one of our custodians that we use. We don't custody money because you want a separation of where you get your advice and who holds the assets. If you have your money at the same place you're getting your advice from, there's conflicts of interest, period. But anyway, so I'm on hold waiting for a rep to come on to help me with a couple issues. And they've got the thing in the background, and it says, in this low interest rate environment, there's still a place for bonds in your portfolio. And listen to our webinar with so-and-so, hoodly doodly guy, who's our fixed income expert, and find out why there's still a place for bonds in your portfolio in this low interest rate environment. Well, translate, and I'm thinking to myself, what translated, what does that mean? That means they're an investment bank. They're trying to raise money for the corporations or the government or whoever, and they've got a bunch of bonds in their portfolio, because that's when companies issue bonds. Just like when you want to refinance your house at lower rates, a company wants to raise money when they can get cheap money. And so it's not a good deal for both of you. But they have them in inventory, whether it's Fidelity, Schwab, Merrill Lynch, Morgan Stanley. And so now they're pushing bonds on everybody, but most investors are fearing, are staying away from bonds, and a lot of them. So the demand is pulled back, and now they've got excess inventory. If you are an investor, be careful of individual bonds, because when rates start to rise, you're going to get run over and the spreads are going to rise. To the extent you're going to do fixed income, and right now it's all a capital gains play. It's not for income, because there's no income to be made. The yields are so low. Use ETFs, exchange traded funds, so you can get in and out real quick. But it just was so disingenuous, because there's so many conflicts behind the scenes you just don't realize. But
Oh,
that is, but Don's right. If bonds are down in this, or flat even in this weak sloppy market today, that's not really a good sign. Normally there's a flight to quality, and that's been less and less each time now.
and so what's interesting, so what should you be focused on? So it's easy to say price is truth, stock nerds, but there's things that you can be watching, such as the dollar. And you can see the dollar really isn't screaming higher today. And so, but when the Dixie was high, so if I put this on a 5-minute chart, I'm going to show you something that's really interesting. We'll compare, we'll look at a 5-minute chart. And so what periods were the markets? What periods were the markets pulling back? So here's European close. Someone have a TV playing? Here's the dollar.
No, I'm hearing your voice echoing, Tim. And now I'm hearing my voice echoing.
I don't know why.
It's fine to me. Sounds good to me.
That happened last week too. Okay, well, we'll just press through. Here's a dollar at European close, and it spikes. And so when we look here at the SPY, we'll keep it circled, that we'll go back to European close. What was happening as the dollar was starting to spike? S&Ps were coming down lower. And so what I'm trying to tell you is what you want to watch is the dollar. And the dollar has a direct correlation on markets right now. And if the Dixie, so this is where monetary policy, maybe the Fed went in and did something, I don't know. But you can see that the dollar has come back off. And then if I come back here to these charts, what have markets done? Yeah, for the most part, other than the NASDAQ here, they've recovered. They've recovered from that 1030 central type sell-off or pullback. And so, and you can look here, we'll keep it on the 5-minute chart, look at the volatility futures. They spike, the volatility futures spike with the dollar, and now they're coming off. And so, well, where's the dollar in the overall mix here? Because the dollar is going to drive a bunch of things. And you could say that's a function of, you could say this is a function of politics. Sure, I can't really argue with that, but let's take it out to a daily chart and just look at probabilistically what's possibly happening here. The dollar is finding support at the 21, and so it's had this tremendous move, and now it's finding support at the 21. If it starts closing below the 21 here, markets, and you want to be open to this scenario, markets are going to move higher. If the dollar takes out like this high here from the end of September, or comes back to the third week of September highs, indices are going to move lower. And at that point, you'll start seeing things like S&Ps, and this is on a daily chart, S&Ps take out, look at that, they'll come back and challenge these lows. And by that time, the markets will investors won't have the appetite for this. And there's a really good chance that they come out and take out these lows. And it's in these markets, in these moments, that I want to see what's happening on a daily chart, but I also really want to come back to the weekly. Because if you look at the weekly chart, this is no big deal. Like, there's long-term investors that are looking at this going, you held the weekly mean, you held the weekly 21 exponential moving average. That's where you should bounce. So the markets are still acting perfectly normal. In June, where did we find support? This pink line at the weekly 21. Where did the markets turn higher for the year? And I'm looking at SPY, it's even more pronounced than the NASDAQ. When they started closing, when did the real turn happen? Above the weekly 21. And if you look at, say, the Qs, so are we above the weekly 21? We are, and it's really hard. You can trade the bearish side in quick sell-offs, but it's really hard to be overall, for me, bearish when you're still above that weekly 21 exponential moving average. Even though you're down 2% in the Qs today, it's hard. You have to take out these lows, start closing below the 21 to start to real. I mean, you can give up this whole game. Listen, there's nothing the markets aren't incapable of. And so this could have been the greatest bull trap ever laid. And come this moment in time, they're going to take it all out. You can have that thought. You can have any thought you want. That Tim, it's not even my thought. I get so many people writing to me, telling me what's going to happen with markets. And I just want you to be open to what could happened to market. So
Well,
And
let
that
me-
21E, that
Go
21E
ahead.
on a weekly, just real quick, is roughly equivalent to the 100 day on a daily.
I would like to mention, follow up on what Tim's saying, because on the flip side, so you hear a lot of the doom and gloomers come up with that argument Tim just said. But then on the flip side, the other argument is, if you get this huge stimulus, they do get a big stimulus package happen. It'll be a lot of spending, plus that'll weaken the dollar, and that'll be good for stocks, and you may have a big rally. So, the two sides to every coin. It doesn't matter. You just got to follow how the market's acting. You can't prognosticate because you don't know for sure.
and so I had a stock nerd write in and said, "What do you think about Walmart?" And this is a beautiful chart. This isn't a pattern that I would say is recognizable. It's not really a cup with handle. It's like a bowl. It's like this rounded bottom type pattern. The pattern isn't really what this is a stock you absolutely. I don't know if it races back to 151, but I'm in it from just below 130, willing to let it see how it plays out. But it's less, it's not down. Let me see before I make that statement. Nope, the Dow's positive, so it's down a little bit more than the SPY and the Dow. But when I look at this on a weekly chart, that's a beautiful chart. And so that's SPY. That is a beautiful chart on SPY. I'm sorry. Let me look at Walmart. There it is. That's a beautiful chart. That's a tremendous looking chart on Walmart. Yeah, you got some, you got these topping tails right here, and so you get some weekly. This is the TikTok deal right here. So there's people trapped up here, but it's Walmart. So to say there's people trapped in Walmart, it's kind of hard. If you want to see stock people might be trapped, and I mean, come to Nikola. There you go. Trap, praying. This is religion on a chart. This is where people find God. They find God in between here. The journey to religion starts here, and then it really starts in earnest here, like your daily passages in the book of markets, chapters 9, page 109, in how to make money in stocks. So that Nikola chart is actually a chart of true religion.
And GM is reviewing that agreement again, reviewing that agreement, and if they pull out, that chart will look great compared to what it'll look like if GM pulls out.
Yep. And so let's do this. I got a couple stocks on my watch list here. The biggest one on my watch list, I think, I'll just keep it on a weekly chart. I like, of course, what Peloton's doing. I mean, but that's Peloton hitting that 1272 extension up at 110. And I like and I don't own a position in Zoom. I need to take this down to as Zoom was up much more earlier in the day. But this is a beautiful consolidation happening here. So I'm going to let that form up a little bit more. But I think my favorite stock on a weekly chart is NVIDIA. And so I'm in NVIDIA already, but there's probably a couple others, but this is one of the prettiest consolidations you're just absorbing. This is a tremendous move. And now you're forming what is known as a continuation pattern, and that continuation pattern is I'll write it backwards, a flat base. And so you get this move higher, you absorb it, and if the story of the market's still intact and the story of the stock is still intact, what happens is these continue on their journey, and that journey could be anywhere from 20, 50, 75, 100%. Yeah, I mean, and the biggest mistake you can make is saying, well, it's too high. Too high based on what? And all those numbers you might throw out, well, price to earnings, book to value, ship to shore. That's not a rating. It doesn't matter. All those eventually become your opinions. And what happens is you miss out on the Pelotons. You miss out on the DKNGs. And then you're left owning, that's not a bad looking chart, but you're left owning stuff that's not moving, or you find yourself chasing. And so that's what we're here to help you avoid. So with that, let's get what Don's looking at for the rest of the markets, and then we'll turn it over to Danny to end the show.
So this morning with the big gap down, days like this, I'm often looking for what is working in the market or what is holding up the best. I had my plan coming in. I talked on the video about how I had a big QLD position Thursday night and where it was purchased. Can you bring up QQQ, Tim?
Yeah.
It was bought with QQQ moving out on Monday and then adding on Wednesday, and it was looking great yesterday. So that little move above the lines 5 days ago. As the bring up a daily of the, or a like maybe a 5-minute chart of the QQQ. So when it that 1, 2, 3, 4, 5, that 6th bar in where it pulled back this morning, and then draw a line, a vertical or a horizontal line going over
to the left or
to the right, to the right. Yeah, when it broke that, I sold it all. And the advantage of that is I can very easily reduce my beta if something's not working. I have a lot of growth stocks. So QLD sold all that. So that took my beta way down. In the morning, I noticed Twilio, which was showing extreme strength. Can you bring up Twilio?
Mm-hmm. Sure can.
So very often what's strong at the beginning of the day continues to be strong. A daily chart, please.
Oh, sorry.
And after the close last night, they were having an analyst day, and they raised their revenue above the high end of the range. Anytime a company itself raises guidance, you got to pay attention to that. It's not an analyst raising guidance. It's the company itself telling you, hey, we're going to do better than we thought we were going to do. So all analysts have their models, and all fundamentalists have their models based on Twilio doing between 401 and 406 million in sales. So they're saying that they're going to come in on the high end of that, and then it kept rallying after they announced that, and it followed through this morning. So I bought some of this after hours and then added to it this morning when I saw the extreme strength.
Let's pull that up.
Yeah, I very rarely do that, but volume, I was doing the video last night. I was logged in. I saw volume come in on it after that move up. I had, it wasn't on the top 21 list, but I had an alert set on it. And when it blew through that, it's a leading stock. It broke the 50, came back through the 50, had been showing relative strength over the last couple of weeks. And so
all this dark
I got
shaded
that
areas after hours.
Yeah, I got that at 466 and then added around 480 this morning.
That's a great price. So your first initial buy
Sorry,
is
266, not 466.
Oh, what's your position size?
266 and 280 combined. I have 2.5% position size. I started small, and then actually 3.5%. I added 1.5% after hours, and then when it broke above the after hours high this morning, I added another 2%, so 3.5%.
I want to ask you a question. Oh, let's go ahead. I wanted to ask a question on how so the listeners know. Because after hours you got to use limit orders. So how do you can't just use a market order? How do you do that?
I was watching the range where it was trading. I was just keeping an eye on it, and I picked a spot between the bid and the ask, and it got filled. It's possible that I would have had to have ratcheted it up a little bit if it was only getting partially filled, but both full orders on TD and at Schwab got filled at 266.
Yeah, and that's what I wanted to bring up. So when you're doing after hours orders, you got to be careful, and sometimes you got to walk the order up. You got to move, manipulate a little bit, start off at a more advantageous price, because those spreads get wider, and you'll be able to move it up toward if you're happy with that. So sometimes you got to work the order.
And Zoom was also something that I had a small position on as it pulled back after that big earnings gap up, and I added a little bit to that this morning as that opened red and was showing relative strength, and actually still is today.
And let's get that on a daily. There you go.
Yeah. So that pullback, big move up on earnings. They had 4 out of 5 days in a row where it wouldn't go below 457. I think I'm in about 460 on the first one and 480-ish on the second one. For like 490, yeah.
Awesome. Okay, what else you got?
I mentioned Datadog was something I bought this week too. So Datadog bought Wednesday and added yesterday, and that's another one where that had a catalyst, and I had an alert set that big spike up. They announced a partnership with Microsoft. When it goes through if you got a leading stock, it's on your list, you got an alert set, and a catalyst sends it through it. You've got to decide, am I going to follow my plan for this stock, which is on my list, or am I just going to sit and watch it? I've sat and watched a lot, but lately something that's acting well and has a burst of volume coming in, it's continued to go higher. So started out with 2%, 2.5% on that, and added another 1.5% yesterday. So 4% size on Datadog.
All right. Anything else?
There's a bunch more, but I talked about QLD. I added QCOM earlier this week on Monday. And right before Qualcomm 2.5% on Monday as it moved out above that prior resistance. And then FCX I bought right before we started the show.
Wow, there you go. So what was your trigger into that?
It was 1580-ish. Had an alert set for that. Alert went off the first time today. The market was in flux, so I set another alert higher. It hit that, and that's a nice move. That's had been showing relative strength for a while. A pretty not as gentle as I would like to see. There was some volume on the pullback, but it's a leader. Held the 50-day moving average several times on that pullback around late September, so about last week.
Let me get that off of there.
And then it came back up through the 21, hung right around the 21 for a couple days, and then today when it broke above that recent high of Monday's high was the trigger into that.
That's Freeport McMoran or
Freeport McMoran, yeah.
Yeah, there's been kind of a consolidation in the
yeah, XME. Right when I got an alert on that, I also got an alert on XME, which is the metals and mining ETF. Not as nice a chart, still below the 50-day moving average, but you can kind of see the same action. Consolidated pullback, held the 100-day or the 21-week, which is that whatever your orange line is there, Tim. That's where it bounced. That's the 200. Yeah, the 100 and the 200 crossed right around there. It held that and it bounced off of there. So easy stop out if it doesn't work, both on FCX and XME should act the same way. You break below the lows of late last week and you're done.
Yeah. Opportunity to look at gold there. Yeah, gold's not really doing anything great. Just hanging around that $1,900 price level, but holding the weekly 21. All right, is that it, Dan? Don?
Yeah, that's it.
All right, Danny, take us out.
All right, folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. And if they go to the subscribe button, they can sign up for this podcast delivered right in their inbox, or they can get our daily market insight. Tim and Don kind of rotate those, little short market 10-minute video after the close every day. We won't spam them. It's up to the person to reach out to us if they want a complimentary portfolio review or just want some help. You can also go to webinars and you can sign up for Don's about once a month, or when time permitting. He does a lunch and learn on Wednesday at noon Eastern time that goes for about an hour, and he takes Q&A at the end. And even if you can't attend because you're working, he'll send you the direct recording after it when it's done. You can also email us with any questions at Dan@revereasset.com, Tim at Revere Asset, or Don at Revere Asset. You can follow me on Twitter at the number 1, Danny Stewart, at D Vanden Board, or at TJ Riazor, or you can always call us old school at 855 Real Wealth. We'll talk to you
All right,
next
we'll see you
week
next week.
on Your Money.